Welcome to the daily update, where I'll go over the action in the market for Wednesday, July 2nd, and we'll see how things look for Thursday, July 3rd. Before diving into today's video, if you find it helpful, consider a 30-day free trial to the SPX investing program. This trial lets you explore my unique approach to market analysis. Full-length daily and weekly videos are available on a delayed basis after the market closes. For immediate access, become a member by clicking on the link below. Had another all-time high. We were up less than 0.5%, but hey, any advance after an all-time high produces another new all-time high after the slight down day that we had on Tuesday. And as I record this, they're still debating the big, beautiful bill. And the hope is that it will be done and President Trump can sign it on the 4th of July. They really have till the end of the year. This is just something that President Trump wanted to do, but they still have more time. It's so big and there's so many different provisions in there that nobody really likes it all the way or doesn't like it all the way. There's some good and some bad in it, and that's why it's called the big, beautiful bill. And there's been some talk of, hey, let's take some of these things in the big part and make some small, beautiful bills and get rid of garbage. So anyway, that's still going back and forth there. The consensus is that it will pass, but nothing is ever for sure until it actually gets done. Like Yogi Berra said, it ain't over till it's over. Okay, so right at the open, we had a lower open and prices climbed above the daily pivot at 61.96. Then we got to the unchanged level and all the way up to R1 at 62.13. So back above 6,200. And then prices held on to the gains. We didn't really see any late day selling. We just kind of drifted along going higher. And we didn't quite make it up to R2 at 62.28, just a little bit below that. And we were up 0.47%. We're still above average with volume. So we're seeing a bit more conviction there. We are positive in the short, intermediate, and long term. We're looking at a recent golden cross with the S&P 500. We've also seen that with the NASDAQ and the NASDAQ 100. So we're switching back to more of a positive backdrop there. And now things, at least in Tuesday's session, it looked like, okay, is value coming in and is the market getting ready to be more defensive? Or was it just kind of a one-day thing, maybe for the beginning of the month and the beginning of the quarter? As of right now, we saw growth come back in on Wednesday. So yeah, that seems to be just something that happened for one day. And now we're shifting back at least a little bit more to a more growth type pattern. Now the market will close early on Thursday. It's going to be closing at 1 p.m. Eastern time. And then we've got the holiday on Friday and then the weekend. And so it's a holiday weekend. It's an American holiday. America has a lot of enemies. Let's just hope that by the time I come back and do the video for Monday and Tuesday and into next week, that nothing crazy will unfold. Hopefully it's just a nice celebration with barbecues and fireworks and parades and all of those things. But there's, of course, things could escalate between Israel and Iran, Russia, Ukraine, and emotions are so high these days that let's just hope something weird doesn't happen. Okay, so some comments. The president did announce that there was a trade deal with Vietnam, and that includes zero tariffs for the U.S. to have access to Vietnamese markets. So, all right. And then the one big, beautiful bill, it remains stuck in the House, and it's still stuck at the time I'm recording this. There's some dissension among Republicans over its cost, which it's like, okay, we just can't justify adding more debt to what we already have. Other people say, well, these are more just cuts. We're not really increasing the cost. We're just going to keep the cuts there. But it gets calculated in as an increase in cost. And there's still a prevailing view that it's going to pass, even though it might not happen by the 4th of July, like President Trump was hoping. Mega caps growth and small caps, as well as mid caps, did outperform. We're seeing a little bit of strength in the small and mid caps now. We've seen that before. Are they going to show some life and then turn and start to go down? That's what we watch for as well. But at least for right now, they're looking better. We have both the S&P 600 and the Russell 2000 small cap indexes are above their 200-day moving average. And the mid caps are also above their 200-day moving average. And then we have our usual list here. When we're either going up or down, we see these short-term indicators pretty much always on the list. That's showing more conviction across multiple indicators. And this includes the Stoch RSI, the Williams Percent R, the CCI charts, and the Stochastics. Those are usually on here, whatever direction we're moving. The ones that kind of come and go that suggest maybe we're a little overextended, the slope oscillator, which has been on here for a long time. It was even negative by being below its moving average, but still giving an extreme positive reading. Now it's going back above its moving average. We're still far away from the 20-period moving average as measured by the boom indicator, and the short-term RSI based on 9 periods is extreme. Intermediate term, kind of a long list here too. We're still up into that +3 channel with the standard deviations chart. CMB composite, which has been on the list for a few days. The rate of change going back 50 periods because it's still including those much lower levels from earlier in April in its calculation. Our momentum oscillators are improving, and we're actually positive in the short and intermediate term, but some of them are already extreme positive. And we're improving with the long-term oscillators, but we're not quite there yet. The Sean trend meter, we're back with the percent B. We closed right on the upper Bollinger Band. So that's looking a little extreme again there. We're also far away from the 50-period moving average for the intermediate term. The bullish percent indexes, both for the S&P and NASDAQ 100, ultimate oscillator, the intermediate term RSI based on 14 periods, and the Chaikin oscillator. Now, the Chaikin money flow is giving us some problems. It actually turned negative after Tuesday. It's flat right now, but the Chaikin oscillator has just kept going up all along the way, and now we're starting to get that to that initial extreme positive reading, and we're starting to get extreme with the advanced decline oscillator based on 10 periods. And I'll show you all these charts here. No change with the overall scenario with the Fed. For right now, the dollar continues to decline. Interest rates were up. We were at 4.25%. Now we're at 4.29%. And sentiment actually ticked down for an up day. That's kind of strange. Usually when we have an up day, sentiment goes up. When we have a down day, sentiment goes down. This might be some pre-holiday hedging going on that affects how the sentiment indicator that we look at is calculated. And we are positive when we have a confirmed trend both in the short and intermediate term. We've crossed above 20. We're above the moving average. The green line is on top. And with the up day, the bias is positive, and our momentum, the last 2, 3, 4, 5, 6 days taken together, are positive as well. We had the ADP employment change. Now, the market could have just tanked on this, but it's like the market's in one of these phases where any news is pretty much treated as good news, even if it's bad news. They thought the ADP employment change was going to be up 97,000 jobs. It was down 33,000 jobs. And we haven't seen that in a while. And then another thing that was a little bit more unnerving here is that the last reading came in at 29,000. Now, when we first had that reading, it was at 37,000. They revised it down to 29,000. But then the market's like, well, we don't really pay much of attention to this. It's the big employment report that'll be coming out on Thursday. That's what we pay most attention to. And so they use that as justification and like, okay, all is well. Let's buy, and drive prices higher. And then the mortgage applications for the week were up 2.7%, where the previous week they were up 1.1%. So here is the look at the ADP chart, where we've been coming down, but we were always still positive there. Now we're actually turning negative for the first time since this chart goes back and records things. And we were up a little bit more with the mortgage applications than we were from the previous week. So here's real investment advice, forward earnings estimates against the S&P, where you have, this is the black line, that's the S&P itself, and then you have the 12-month forward earnings per share actually coming down a little bit. They're still positive, but they're being revised down a little bit. And this is ultimately what drives stock prices. If earnings are going up, stocks go up, and vice versa for that as well. And then slingshot is in play in 2025. So what happens, according to Carson here, when we have a negative first quarter, which we did, and then we're up more than 10% in the second quarter, which, okay, fine here. And things look pretty good. The return going out, we see a perfect track record. We're not sure what's going to happen this year yet, but with some good returns. For the third quarter, we look at 10.7% for the average, 10.8 for the median, and then for the rest of the year, 19% and 14.5%. So then you take all the years going back to 1950, the results aren't quite as good, but still respectable nonetheless. Then consensus expects margins will remain near all-time highs. These are quarterly net profit margins, where the blue, that's what we're dealing with right now, and they still expect this to go up into the future. And that, again, justifies stock prices going up. Then the ISM manufacturing, which we did get that report, we're improving a little bit here, but still a bit of a disconnect, where even though these are on different sides, we get the ISM below 50 here. The scale's over on the left-hand side. And we're going up with the year-over-year percentage change for the S&P, where you can see in previous times they tend to stay closer to each other. Well, at least they're going in the same direction now. Or the last time we had this, we were going up with the S&P and down with the ISM manufacturing index. Sector flows, still not a surprise here. We're seeing money going back into tech. That's the strongest sector still, and that's the big growth area. And then the average annual inflation of 152 countries going back to 1971. That's when the U.S. went off the gold standard, and instead of being backed by gold with the U.S. dollar, it's like, well, we're good for it. Just do all your transactions in dollars, and everything will just be fine. That was called the Bretton Woods Agreement, and that collapsed at that time. That was under President Nixon. No country has averaged less than 2% inflation, but Switzerland, okay, they're the closest at 2.2%. 107 of these countries average above 5%, 55 above 10%. Okay, and somehow you can get all that from this particular chart. All right, then oil prices move against stock prices in a 30-year cycle. Okay, roughly every 30 years we see a new high of the S&P 500 to oil ratio, and I do go over that in the weekend videos. And every time, 10 years later, we see a low for the same ratio. All right, that's pretty long term right there. And then the ADP payrolls, they fell by 33,000. This goes in line with the economic report. And the first negative print going back to March 2023. All right, and I'm not into this because the context is different every time, but they like to do this. And then S&P against noise. They were literally telling you to sell your stocks after the market had already bottomed. This is why I don't pay attention to the financial media. And we just look at the charts. And it's enough just dealing with your own emotions. It's like, have we bottomed? Are we going to start to go up? That's why I look at so many different charts. We use short, intermediate, long-term, and very long-term support levels when we're really going down. Because emotions are saying bail, bail, bail. And if you listen to that, you're usually doing it at exactly the wrong time. That's the biggest thing in overcoming the drawbacks of the stock market is it goes against human logic and human emotion. You should be selling when you're buying. You should be buying when you're selling. But it doesn't feel like the right thing to do, and so we tend to not do that. And this just kind of says sell, sell, sell here. All right, and that would have been a bad time to keep selling. But we've seen that before. We saw it at the bottom in October 2022. We saw it at the bottom on October 23. We saw it in the April 2025 lows. It's like, okay, and I'm getting comments and emails from people saying, we're going lower, we're going lower. That's my own personal indicator saying we're probably at a bottom when people are completely convinced that we're just going down from here. The perma bears are partying like crazy. We're pretty much at a bottom at that point, but we don't really know that at the time because we're not sure how far we're going to go before we start to bounce up. Mastering the stock market is challenging and can take decades to achieve. Most beginner traders and investors feel overwhelmed and often fail. Stay ahead with the SPX investing program. Members gain access to the full program. Other options include immediate access to videos as they become available. Alternatively, the daily and weekly newsletters may be helpful. Click on the link below to find out what's best for you. Okay, so pretty smooth looking chart. We did open lower, got above the daily pivot, got above the unchanged level, got up to R1, held on to the gains, and then just drifted up. We got above the 62.25 level, but not quite up to R2, and closed at the intraday high. And we're pretty much flat. I think there might be some waiting going on. Plus, we've got the holiday coming up, but they're wondering about this big, beautiful bill. If it's going to go through or not go through, and then the market might react to that. Still seeing pretty much of an even intraday chart here when we look at large cap growth to value, but for the most part, they're still going up. And after taking a big dump down here in Tuesday's session, we are clawing our way back with S&P growth to value on the intraday chart. End of day, growth was up more than value, so that's why growth outperformed there, but it was up less for the mid caps, and it was up strong for the small caps, but still less than value. So we're coming down a little bit here. We're breaking below the 50-day moving average with the small cap growth to value ratio. Decline, but still above both moving averages with mid cap growth to value, and actually bouncing back up with S&P growth to value. And a little bit of a tick up here with the growth to value ratio on this chart. And then looking at discretionary, actually doing okay, but then staples were doing all right, but discretionary was doing better. So we're still going up and improving here. The longer we stay above both of these lines, the more we might see a golden cross with this ratio, but we're not quite there yet. And the trend, we now are above 20, above the moving average, and green on top. So this is a confirmed positive short-term trend, also a confirmed positive intermediate-term trend. We're still above average with volume. We are dropping off with volume, but we're still above zero here with the oscillator. And we picked up a little bit in Wednesday's session as far as the average volume. And sentiment, we're still under 20 with the VIX. We're pretty much flat. It was up just a little bit here, both with the bar chart and the line chart. And we're continuing to be under the moving averages with the VIX of the VIX. So that shows volatility is decreasing there. Kind of going sideways right now as far as the momentum, but we're still basically going in a downtrend now with the VIX. We declined with this fear gauge and we declined with the other fear gauge. Saw a little bit of a tick up on the daily equity put call ratio chart, but we're still going down, ticking up just a little bit with the 5-day chart, but we're underneath the red line. Now, this going down tends to be more positive, but when this starts to go back up, especially after it's extreme, but we've been down here a lot over the last couple of years, that's when we get a little bit more nervous. But we're still declining with the 10-day moving average of the equity put call ratio. And this is where we're showing more risk on. We're seeing the risk on, risk off ratio continue to go up, and that is positive. And the high beta to low beta continuing to go up here, actually setting just about a new all-time high with this ratio. And we're still a little elevated here with volatility risk premium. We're going sideways, but we're above the band. The advanced decline line, another update. We're still looking pretty good internally, so we're setting a new all-time high based on price and volume. And volume is still tending to outperform price, and that tends to be more positive in this context. We are getting a little extreme here. We're above zero with this is the advanced decline oscillator when we go above 100. And looking at the advanced decline ratio, we're positive. The blue line and the red line are going up. We are looking a little bit extreme based on volume, though. And we're looking good internally, even though we're seeing a bit of a fallback here with the new highs, a little bit of an expansion of the new lows. Both the 5-day and 10-day moving average charts are going up. And we're looking positive here, accumulation distribution above the red line, and the red line's going up, and we're going up above the red line. We came down to the moving average, and we're still above the moving average with the boom indicator. This one is flat, where we're actually negative with the Chaikin money flow. We bounced back up here, but not enough to really turn the line up. It just stopped it from going down. This is the one that's really been going up, the Chaikin oscillator. We're above the initial area where we really start to pay more attention. If we get all the way up to the green area, we could go above that, but this is when we really pay more attention to this chart. We are positive with the vortex, and then showing some of the advanced decline line studies. New all-time high based on price for the S&P, the cumulative chart, and just really showing some strength here with the cumulative volume for the S&P and setting another new all-time high. Improving with the 10-day average of the highs lows for the S&P. We were really dropping down. It takes a while longer for this indicator to improve. It is improving, but we're not up to the green area yet. And then this is even longer term. This is the 50-day moving average of the new highs minus the new lows, continuing to be positive above zero. Above all the moving averages here with the advanced decline line studies and looking pretty solid that way. And then we look at the broad market advanced decline line studies. The cumulative advanced decline line setting a new all-time high, setting a new all-time high with the regular NYSE advanced decline line, as well as this other NYSE advanced decline line. Breaking it out based on common stock, we are breaking out to a new all-time high based on price as well as volume. And then again, I say this, it's apples to oranges here. We look at the S&P, that's the bar chart, and then the NYSE advanced decline line. Those are the oranges. We're really seeing an improvement here where we were seeing a bit of an underperformance. Now we're seeing the red line really showing some improvement that way. We're also looking good from an internal measure here. The 5-period moving average of the highs minus the lows. We're continuing to climb above zero. And we actually fell back a little bit with those stocks in the S&P above their 20-period moving average. So there's a little bit of internal weakness going on there. We were extreme above 80. Now we're still positive, but we did come down a little bit with the latest reading. Also fell slightly with the 50-period moving average study. Ticked down a little bit with the 100. And we are still improving, and this is more encouraging. This means that now there's 62.6% of stocks, where just a couple of days ago it was 56. So we are going up now. This just means more stocks are seeing their longer-term trends improving inside of the S&P. Here is another new high here. We actually broke above this previous pivot point here that we were dealing with in June. We never got up to that point, but we kind of slowed us down here for a little while. And now this has us actually below average with volume, or the other chart that I look at has us above average. And we ticked down a little bit with the 20 and 50. We were starting to get extreme. This is an exponential moving average on the S&P itself, not just the things that are inside of the S&P. This is looking at the index overall. And these are our usual short-term charts. The Stochastic RSI showing good short-term momentum, possibly a little overextended. The Williams percent R, both CCI charts, and the Stochastics looking extreme positive here on all different subdivisions of the short-term time frame. Still looking positive above the midpoint with the force index. The short-term trend based on 20 periods continues to be solid. And we're still up in the high end now of the +3 channel with the standard deviations chart. Now we switch over to intermediate term, going up with a balance of power. That's positive. And going up with all the lines, the fluorescent green line, red, and blue line here, as we're continuing to set new all-time highs. And we're still extreme with the CMB composite. Positive with the go, no-go system, darker blue bars. Still hitting the blue line here of the highest high value, and the lines are going up. Still looking positive with the Landry light as well as the proper order. TTM squeeze, lighter shade of blue here. We are getting a little close to the black line, but we'll call that overextended if we actually get up to the black line. And here's the rate of change going back 50 periods, still giving us quite an extreme reading. We are coming above the moving average. That means the speed is increasing as we've been going up. And still just floating along, just barely above zero with the ease of movement. And this really hasn't seen much of a change. Coming down just a little bit with the Arun. We never did get quite extreme positive here. We are still positive with this since we're above zero. And we ticked down a little bit with the S&P McClellan oscillator after we were just barely getting up to the extreme reading there. But since we're above zero, though, the summation index based on price and volume continued to go up. We are seeing more strength in the broader market. The NYSE McClellan oscillator continues to go up. So we're going up with the summation index based on price and volume for the NYSE. Swing trading oscillator. We were getting a mixed signal here. We were slowing down going up based on price. We were actually declining based on volume. They both have now switched back to positive. And we're positive here with the PMO, but we're above this red line and above the moving average. So that's why we're extreme positive. We are advancing based on price and volume. And we actually ticked down a little bit with the PMOs that are rising. Still going up with the buy signals, going up with the PMOs that are above zero. Positive with the Elder's Impulse system for the S&P, positive with the parabolic SAR. And here's the short-term oscillator, the slope above its moving average and above the green line. Positive, but extreme positive. The MACD is positive. That's more short to intermediate term. And we look at our two short-term oscillators. They are positive. The three intermediate term oscillators are now positive. We're turning up with the long-term tricks, and we're right about at the moving average, where we're just coming up to the moving average with the KST. Positive with the Copic curve momentum indicator. Actually ticked down a little bit, but still in this darker green area with the Sean trend meter, so it's still positive. Still above 50 with the money flow, and still extreme positive with the ultimate oscillator. Still above the moving average with on balance volume. Right on the upper Bollinger Band here with the percent B indicator. Looking extreme in the intermediate term RSI as well as the short term RSI. Intermediate term trend still looking solid here above the red line. Both the red line and blue line continue to go up. We're above all the plotted moving averages, so the lines are starting to go back up, which is more positive. But we are far away from the 20 and 50 period moving averages. And price has a tendency to snap back. But we've been seeing this extreme reading now for a number of days. And we ticked down a little bit with the bullish percent index. We're still above 70. That's an extreme positive reading, but we're still above the moving average. And we're going up with the NYSE bullish percent index and going up with the NASDAQ 100 bullish percent index, and we're above 70. So that's extreme. Looking good here. We're up 0.88% so far on the week. So if we have an unchanged to slightly higher close on Thursday, we'll have another up week. Of course, if we go down, the opposite will be true. All right, and we're still looking positive here with the different ways that we look at trend. The Heiken Ashi is positive, the Kegi chart is positive, the Renko chart is positive, and the three-line break is positive. Still above the midpoint here with the 150 and 200. We actually ticked down a little bit with the 150, but we're still going up with the 200-day moving average. And for this should be positive. We're above the 200-day moving average with the small caps. They changed it for the mid caps finally, but they didn't change it for the small caps here. And then we're still positive across the board. We're really seeing some strength in commodities right now and a lot of weakness in the dollar. Bonds are positive in the short and intermediate term. And then we see down here, healthcare, utilities, communication ended up getting hit a little bit, and financials. Where energy, which has just been getting hammered because it just went through the roof, then it fell back down, saw a bit of a bounce here. And then tech ended up being more positive as well. Awful lot of green here. Utilities had a BPI cross above 50. We just saw one cross below 50. Another day, another new all-time high in Canada. Materials, which we're seeing some profit taking, they had a BPI cross back above 80. Staples are crossing back above 50, showing a little bit of strength there. That's more defensive. We did get above 6,200 with the S&P. We got above 20,300 here with the NASDAQ, setting a new all-time high with the S&P as well as the NASDAQ. And what they don't show here is the NASDAQ 100. And then communication had another BPI cross back above 70. So we saw a little bit of strength coming back in there. And so some of the bigger names you see are green, like Nvidia, Apple. That's what helped things go up. We had Google being up, even though Meta was down slightly. Amazon was down, but then Tesla was up almost 5%. So that's what really helped drive the indexes back up. And still improving here, seeing a little bit of a disconnect, but both lines are going up, both the bar chart and the red line when we look at the weighted versus equal weighted S&P. And we're going up, we're actually down a little bit here, but we've been going up above the 200-day moving average with the Dow. The longer we stay up here, we might see a golden cross at some point in the future with the Dow. We're positive with the diamonds when looking at the Elder's Impulse system. And then we're back after just generating a golden cross with the NASDAQ. It was up 0.94%. We've gone from neutral to back to positive for the NASDAQ. And we were up 0.73% with the NASDAQ 100, also from neutral back over to positive with the Qs, with the Elder's Impulse system. Still looking barely positive here, not an awful lot of conviction with the momentum of the NASDAQ 100. And as I've been pointing out, this is a weekly chart. We're getting right up to this trend line here. Is that going to produce some kind of a problem? We could go above it, and we've gone above it before. We did it. We spent a lot of 2024 above this line. We'll see if we're able to recapture that. That would show even more strength if we could stay above that. We're just barely above the 200-day moving average with the S&P 600, and we're clearing the 200-day moving average with the Russell 2000 small caps. That's actually happened a couple of days ago. So we're positive with the small caps with the Elder's Impulse system. We're above the 200-day moving average with the mid caps, positive with the Elder's Impulse system for the mid caps, generating a golden cross here with the Wilshire 5000, setting another new all-time high. That's a broad market measure. And we're also working off of a recent golden cross with the total US stock ETF and setting an all-time high here. Financial sector was actually down a little bit, but still looking pretty solid. The FANG index was up, but still not back to an all-time high. Also working off of a golden cross that was generated at the beginning of June. And Apple was up 2.22%, climbing further above its 50-day moving average. Seeing a little bit of a decline with Microsoft, but still in an uptrend. Amazon's above both moving averages. We might see a golden cross here pretty soon, but we're not quite there yet. Google was up 1.59% above its 200-day moving average. Meta was down, but in an overall uptrend. Tesla bounced back up, and we're seeing kind of price and both moving averages all kind of converging with each other right here. Nvidia seeing a recent golden cross, up 2.58%. Netflix still continues to see a little bit more profit taking, but the longer term uptrend is still well intact. Semiconductors with the Dow Jones Semiconductor Index, recent golden cross, really looking solid again here. Also, the SMH ETF, we are generating a golden cross here. This is the same ETF, but we're above the rainbow. We're not, just a little bit above the closing high back here that was set back in 2024. Starting to go up again with the semis to tech ratio, and that's more positive. If this can keep going up, that means the semis are outperforming tech, and even if tech's doing well, semis doing even better. That's more positive for the market. All right, then looking at some of the different ratios here, not really seeing much of a change. Been going sideways when we look at the weighted discretionary to staples ratio. But when we look at the equal weighted, we are showing some improvement. This is the same chart that I showed earlier. And then the tech to utilities ratio has been going up. That's where we're seeing a lot of the growth coming from. Improving with biotech, which is growth to healthcare, which is defensive, but not really breaking out yet. And we are improving when we look at hotels versus utilities as well. These are more growth areas. And when these ratios are going up, that means growth is outperforming value, and that's more positive. Looking at the bellwethers are improving here with the semiconductors. The home builders really bounced up in Tuesday's session and are holding on to those gains right now. The transports have been showing some improvement. Retail showing some improvement, and regional banks also improving. And these going up, that just is more positive for the market overall. Still seeing a strengthening correlation in the short term between US and world stocks, kind of leveling off here and actually starting to decline with the longer term correlation. We were up with oil, getting more into the high 60s after being in the mid 60s. The dollar continues just to go down. And we ticked back up a little bit, but we're still under 2% with the latest reading from Truflation. We were back up with the 10-year yield, but we're still well below that 4.5% level. And we came down a little bit with the 10-year based on price. We're still inverted with the 10-year to 3-month yield curve. And not much of an improvement here. We came back up to the moving average with the Qs to S&P. We are improving, but still below a declining moving average with discretionary to the S&P, and coming back up to the moving average when we compare large cap growth to value. So a little bit under the moving average with the large caps, mid caps, and small caps. So not a big improvement that way. We are still going up, though, with the S&P to utilities ratio. When this is going up, that means the S&P is outperforming utilities. With each video and course, members learn to implement the consensus approach. a unique analytical method. Unlike relying on a few indicators that eventually fail, this approach overcomes analysis paralysis by using the weight of the evidence to draw conclusions. Developed over decades across all market conditions, explore the SPX investing program and start with a 30-day free trial. So what's the outlook then for Thursday? Again, the markets will close at 1 p.m. Eastern Time on July 3rd. We are positive and trending on all time frames now. And this is going to be a big day, even though it's an early close. We'll see how the market reacts to things. We'll get initial jobless claims and continuing claims. And then on top of that is the employment report will be coming out. And then this isn't as big of a deal. These are the services for the S&P. This is global. And then this is the big one for the US. This is non-manufacturing, or you could say services here. That'll be coming out. So these are major reports that we're getting hit with all at one time. And then factory orders will also be coming out. And then anything geopolitical that could develop over the weekend, which could include something domestically as well. And I really hope nothing like that happens. And when the market will be closed on Friday. And here's a look at what the previous readings were and then what the forecasts are for some of these economic reports. Seasonally, we're positive with the S&P and NASDAQ, just flat out positive, where we're neutral to positive with the Dow for July 3rd. And then when you look at this from a post-election year standpoint, now we're not really seeing it yet. We were down a little bit on Tuesday and we were up on Wednesday, but a little bit of weakness here going into the July 4th holiday before we do tend to see more seasonal strength that goes up kind of through the middle of July, about when we hit options expiration. And it's not like things fall apart either. They just stop going up as much during a post-election year. This is that same chart, but without all the gobbledygook on there, where we do see a little bit of weakness for the next couple of days that really hasn't been playing out before we see some strength coming back in. And then I've been showing this. This will probably be the last time I show this, and I'll throw this over to the weekly video. Post-election years have been very strong lately. This is where we tend to do quite well here, where everybody thinks it's the election year. Oh, we're automatically going to go up. And we do tend to perform well, but it not as much as a pre-election year or even a post-election year. And then weakness early is normal. This is going back to June and then into July, where we saw the weakness earlier on, and now we're seeing the bounce up from that. And then this also shows a little bit of a lull in the latter part of June and then into the early part of July before we see some seasonal strength here during a post-election year. We are up 12 out of 18 times during a post-election year going back to 1950. We're down 6 out of 18 times with a return of 2.2%. First half of July tends to be the best performing half of the month for the whole year. Positive no matter how you slice it and dice it here for how July has been performing. And this is a newer chart here, seasonal composite 4-year presidential election cycle, where this is the post-election. And we've been kind of sticking to this in a way where you go back to 2024 and then we see a bit of a problem. Well, we had a big problem this year, but then we've been coming up from that and we see a little bit of strength going in here. And then about in August and September, that's when we seasonally see some weakness. That's when we might drift a little bit. And then we kind of just chop along sideways going into the rest of the year. We'll have to see how well we stick to that over time. And then for the first part of the month of July, the NASDAQ tends to perform well on a seasonal basis. So we're still negative, although we're improving with the discretionary to staples ratio, and the long-term special K chart is negative there. A lot of positive things now. You might not like this, that the Chaikin money flow is actually flat. So unless we have kind of an upward move, and plus we're going to close early on Thursday. And so some people might be taking off. They may not want to get long in some positions over a holiday weekend. But we are looking fairly positive here with the Chaikin money flow, kind of the holdout, where the Chaikin oscillator is looking good, but accumulation distribution is positive. We are positive with our long-term growth to value ratio for the S&P. Both the NYSE and S&P McClellan oscillators and summation indexes continue to be positive, as does the parabolic SAR, the bullish percent indexes, but we're extreme with the S&P and NASDAQ 100 BPIs. Swelling trading oscillator switching back both to positive based on price and volume. The oscillators, we are improving with the longer term, but we're turning positive with the short and intermediate term oscillators and the Copic curve. Ease of movement, money flow, and ultimate oscillator, even though it's extreme, it is still positive. The vortex, financial sector, and then the momentum for the NASDAQ 100. Here are the pivot points for Thursday's session, and they've already been updated on the YouTube community tab as well as on the website. So the conclusion, no change here. We're positive on all time frames, seeing a golden cross. Actually, there was a change here. I forgot to change that in yesterday's video. This is now positive, longer term. Thank you. I want to extend a very happy Independence Day to all of you. I will be preparing the videos over the weekend, even though I get to go to a barbecue and I'm not in the US right now. So it's kind of a special thing. So have a great day, and I will talk to you in the next video.